Live from the Traders Expo in Chicago, I'm Adrian Manns. I'm here with my friend Jon Najarian, and we're going to talk about the economy. Where do you think things are going?
Adrian, I think it's better than a lot of the talking heads on TV want to say how bad it is. I think it's better than that, but I do think there's a whole bunch of reasons why it's sort of paused. I bet you see it in your business all the time. I'm not going to use that hackneyed phrase that people are uncertain and that's why they're holding off. I think they're just being patient. And I think there are times to be patient when you're an investor, and there are times when you got to move quickly. December would be an example, Adrian, of when you want to move quickly. When you see the market falling by 10 or 15 or 20%,
right.
If you want to wait and be patient, you're going to miss it. I bet a lot of people did. I'm not going to say I caught the entire bottom there or anything, but I was moving quickly in a lot of the stocks in Facebook, in Apple, and things like that. Didn't buy everything on the bottom, but I think you had to move quick because otherwise you're chasing. And I think right now it's a time for patience rather than speed and quickness.
So most of my guys are traders, right? They're intraday traders, and they're complaining that they feel like the market's stalling out. They feel like, you think it's really stalling out, or is it just summertime trading? And
the latter.
Yeah,
I think it is.
Too.
Honestly,
yeah.
I think it's summertime trading. You
right.
and I see it all the time. I don't want to say for how many years, Adrian.
Yeah,
but
right.
I mean, we've seen it for a long time. That in summer, whether it's doldrums, whether it's the desks are a little thinner and people aren't swinging as hard because there's not necessarily less liquidity, but there's, I think the larger you are at the firm, the more you can swing a big bat.
Right.
And so, whether we're talking about billions and whether it's Bobby Axelrod and he's on vacation, so dollar bill isn't swinging as big as Bobby Axelrod. Right. I think you get that kind of thing in the summertime, especially as some of the younger traders sort of get to fill the desk with more of their trades rather than the single focus trades that you get out of a Stevie Cohen or out of a Carl Icahn and things like that. I think they spread them around more.
Now, if we get a deal, if we get a China deal, you think the big boys will be back in time to have tons of liquidity, or is the market going to shoot in one direction? Or
I think it may or may not be, and I'd probably say it's 66%, 2/3 chance that when we get the China deal, it's a sell the news event for the short term. For the very short term, Adrian, because I think everybody will say, oh, you got to fade this 800-point rally or whatever it is out of the Dow, or this 200-point rally out of the S&Ps. I think we could get something like that on an announced deal where both sides came out and said, we have a deal. However, I believe it'll be sold off rather quickly, maybe not all the way back down, but that gain will be halved very quickly and maybe even all the way back down to unched over the course of 2 days. But then, as we get more of the details about the deal, I think it's Katie bar the door, and we're off to the races at that point.
And what about the Fed, right? Everybody was expecting, there was a lot of high expectation, and then the air sort of got let out of the whole thing. What do you think's happening going forward here? I
think the Fed is still going to cut. I think, at July 31st, they'll give us a quarter-point cut. I think that's a take-back, sort of like, I love sports analogies. I'm going to say it's like you made a bad call in the third quarter and you're sort of giving it back a little bit by giving them a call that's really kind of too close to call, but you give it anyway. Right. I think that December rate hike was not necessary. I think mentally as well as just from a standpoint of we didn't need it. There wasn't that flash of inflation or anything else that they needed to slow us down. Right. They just wanted to build a little room so they had more room to cut if and when they needed to. And I think that's the wrong way to approach it. So I think they're taking that back off the table. And then we'll see, Adrian. I don't know if we get more than one or so more hikes. I'm not one of those guys calling for 3 or 4 hikes. Cuts, rather.
Cuts, sorry. Right. But it sounds like overall you're pretty positive on the whole outlook, markets and economy and the whole thing, right?
Yep, I am. I think one of the wild cards is, that China's had to spend themselves very aggressively to keep their nose right above water.
Right.
Because that's been a very tough 18 months for China. And the fact that firms are moving their supply chains and so forth, that's not good for China. They have to stem that quickly, and I think they will.
Okay. All right, so I'll be back in a few minutes with more with Jon Najarian for the Traders Expo. I'm Adrian Mans.